long-term working relationships take as defined long-term. I'm going to bet my job that this is the technology we need, Corp Dev, buy them.
Rob, thank you very much for speaking with us. So tell us broadly, what's happening in the deal space?
Okay, well, let me frame up what we do. Corum is an M&A consultancy.
Yes.
The broad term is investment banker. We're very unique. We only work with sell side, and we only do technology.
And you're not on Wall Street?
No, we're not on Wall Street.
At least physically.
No, I'm based out of the Corum headquarters in the U.S.
Seattle,
It's in Seattle. Zurich is our international headquarters.
Yeah.
So the M&A space, pretty active these days. Unprecedented amounts of cash. The strategics have over $500 billion, and the private equity groups have about $1 trillion to spend. So a very, very active market.
And what's driving this? I mean, is it technology? Is it companies who are trying to grow? Is it the tail effect of a slowdown?
Well, I think that's where a lot of the cash came from the last trough. But we're in the 5.7 year of this fourth longest bull market that we've had since the Great Depression. So no one knows how spring-loaded we are for a reset. But right now, things are extremely active. A lot of deal volume, and across all sectors. SaaS is extremely interesting to the private equity groups in particular.
So if I were to ask you about the three biggest deals or most prominent deals that you worked on in the last few months, what would be the common characteristics?
Well, I just mentioned SaaS. I think that would be, that's kind of the darling of the industry, especially on the private equity side. Historically, they've looked for tall EBITDA so that they could debt finance and stretch their tranches of investment further. But right now, the multiples that are being expressed don't have anything to do with EBITDA. So discounted cash flow is kind of irrelevant in that model. We're seeing basically year-over-year growth is the prime driver only on revenue multiples. So if a company is doing 30% year-over-year growth, you can see or expect maybe a 5 to 6x multiple on revenues. It's kind of like losing airspeed to gain, losing altitude to gain airspeed, right? So if you're spending all your earnings or reinvesting all earnings into growth, keeping your lead against competition, gaining market share and year-over-year growth, either in customer acquisition or revenues, that's the driver.
And what are the other verticals
in concert with the annuity model, of course.
Right. And what are the other verticals that you're seeing this kind of enthusiasm or action?
Healthcare is very big. Supply chain management is very big, really across all sectors. We track, Corum does, 6 major sectors in the software industry and 27 subsectors, and they're all pretty high right now. The aggregate, I think, is 13 times EBITDA across the six sectors, and probably, I think it's like 2.5 to 3x on revenue multiples.
Right. And
very healthy.
And what are the kind of trends you're seeing ahead, if you were to look at the year ahead? I mean, you're obviously saying that this is already really frothing up, perhaps, but what's it looking like?
Well, it looks like steady as she goes. We're on a good trajectory right now. We're doing, Corum is worldwide. We have 12 international offices. 65% of our deals involve a non-U.S. buyer or seller. Very active. Money is everywhere. Technology is everywhere, as we see right here in India. We're really enthused with what we see here, especially on the product side. So we hope that the markets persist. There's a lot of conditions that kind of maybe gives pause for a reset or a correction in the market, and things consolidate, things happen, paradigm shift in technologies. All these things can affect what's going on, but right now we're on a pretty good clip, and the slope is holding steady.
Right. So the Alibaba IPO was obviously long in coming, but it's now here, and now it's a giant e-commerce company, which which one did not expect to land in the manner it did. What does that tell us? And
well, I mean,
what does that portend, more importantly?
A better question is, what does SoftBank's investment in Snapdeal tell us? $627 million and another $215 million in, what was it, Ola Cab?
Yes.
Right? And his statement, I think, is something like that India looks like, or this sector of the, this geo looks like the next Silicon Valley here. So lots of high expectations. There are some challenges, kind of equating what's going on here in terms of the. I would guess or venture a guess that maybe a $500,000 company here in India is equivalent to a $5 million company in the U.S. So it's hard to kind of connect that last little synapse gap in terms of getting the strategic and then the private equity buyers interested in what's going on here. This is a challenge we're interested in kind of undertaking. A smart conduit that takes what the rich ore that exists here into the world markets.
Right. So you're not necessarily, or companies are not necessarily looking for large scale, therefore. So you're saying that they're accounting for the fact that it could be 1/10 of the size. That's why I asked you about Alibaba. Alibaba is huge.
They're not. No, that's the situation. Because there's so much money in the market right now, $1.5 trillion to spend basically across the tall financial buyers and the strategics. The corp dev guys aren't really interested in doing small deals. They have, and the private equity guys don't get their fees until they do invest that money. So they'd like to lay it down in big chunks. One of the things that I've discovered taking kind of pre-revenue companies into the market, we don't do very many of those, but I have 2 clients right now with stunning technology, perfect missing piece of the puzzle for strategics and private equity group portfolio companies, but they just don't move the needle. And unless they have some relationship down in the division, if there is a sponsor or a champion, a relationship that's pre-existing, then these deals get done, as you saw with BookPad and Yahoo here recently, and we were instrumental in helping that along. So.
Right.
I think that's the crucial missing element right now is that, and McClure said this yesterday, that he was listing, stack ranking the reasons why startups don't make it. And number 1 was lack of market traction. I think number 2 was cash, and 3 was team, it's cohesion in the team. So if you invert that, the thing to do is to get into the market sooner. Once you've got your product kind of in place, pause there for a while, then put all your resource into subscribing the market, and establishing those working relationships with the clients that you want, the customers that you intend, who will ultimately be that buyer community.
Right. So last question. So what is the one thing that, again, if you look at some of the big strategics buying small companies, what are the 1 or 2 common things that have helped the smaller ones become good targets? And what are the mistakes that perhaps people have made and therefore, either fallen afoul or not measured up?
If you look at it from the technical standpoint, those things get snapped up right away, especially the PEs. They just see, all the metrics are there. Let's just buy this company and we'll throw it into the portfolio and it'll resonate very well with a couple of these as bolt-ons or something like that. The flip side of that is companies that aren't there yet and they're struggling. They've got great tech, and it's back to the relationship aspect. I think that's mistakes that they didn't make was forming up long-term working relationships take, as defined, long-term. It starts with a coffee, but maybe 6 months later, you're just rung 1 on a 10-step ladder. So it's going to take 18 months sometimes to get to that position. You find yourself distressed for cash or kind of in a critical cash situation. You're on the warning track. It's too late to gin up these relationships. And I think that's where a good consultancy can come into play too. Making those relationships, saying by way of personal endorsement or professional endorsement, this is a good pick. Right. Work with these guys. The same thing, as a sponsor would say, I'm going to bet my job that this is the technology we need, Corp Dev, buy them. And they will. They'll respond.
Right. And then that's a good piece of advice and a note to end on. Thank you so much, Rob.
Good. You're very welcome. Thank you.